Now, we see global markets looking mixed today, and hawkish comments coming out from the New York Fed chair, James Dudley, saying that he does see inflation going up because more jobs are being created, etc., etc. Although there's a question mark as to whether wages are going up as fast as job creation. But when you look at those comments, what other factors as well may or may not have affected the global markets today?
Yeah, look, excuse me, I think you're right. We saw the I always call it the Reserve Bank, but the US Federal Reserve the other day, saying quite categorically that we are going to see interest rates rising throughout the course of this year and maybe into next year as well. Look, Janet Yellen's term expires next year, so we're not entirely sure what's going to happen there. But Dudley is right, I think. Inflation has been rising for a while now. It's quite perceptibly as well. So I think, given that, I think it was likely we're going to see rates rising on the back of that anyway, even if you take away all of the other extraneous American factors. So I think with that in mind, yes, we're going to see a continued rise in interest rates. And that is in itself is fascinating because other countries around the world are going to start doing the same thing eventually. If not this year, then probably next. So you now look at the situation with South Africa and the rand, and you alluded to it in the intro here. All other things being equal, I think it would be fair to assume that South African rates would probably have to start rising as well, if for no other reason than to protect the currency against protect the value of the rand. But that's not the case. There's now a clamour for a reduction in interest rates, and if you take the public protector's remarks, I think it doesn't take a genius to work out that what she's effectively saying is that if you're wanting growth, and there are precious few ways to try and generate growth now, other than maybe having a profound reduction in interest rates. The problem you've got with that is that would then throw your 3 to 6% range in terms of monetary inflation targeting out of the window, and then you start going down the slippery slope to hyperinflation.
Indeed. Now, most days I hear myself telling the audience that the all-share index is in the red. It really hasn't been doing well for a number of months now. What's your expectation for the second half of the year? And given the fact that it's not doing well, what does a normal, regular person at home who has a bit of money to spend, where should they invest? Should they avoid equities for now, local equities for now, and perhaps invest in retail bonds?
Well, the interesting thing about the JSE All-Share Index is, in fact, it's not a few months. It's the best part of 3 years. It's been going pretty much sideways. And one of the reasons for that, and it comes back to the rand, has been the strong rand. If you look at our market in dollar terms, it's been a great performer over the past couple of years. But in rand terms, as we said just now, it's gone pretty much sideways to down. Now, with that in mind, if the rand starts to weaken during the second half of this year, then I think it's likely, given the composition of the index, the fact that 70% of the market cap of the all-share index is accounted for by the big multinationals, the likes of Richemont, Naspers, British American Tobacco, Anheuser-Busch InBev, companies like that, that are either dual-listed or derive the bulk of their earnings from outside of South Africa, then I think it's likely you could see, ironically, this appreciation in the value of the all-share index purely on the basis of a weak rand.
And then you get that story of the markets not reflecting what's happening in the real economy.
Precisely. You have this huge divide between a languishing economy that's at or in recession, and yet the market's actually booming. So it's a kind of false situation, and it's all really predicated on the weak rand.
Now, we touched on the public protector and her pronouncement yesterday about changing the constitution, the Reserve Bank and so on. Why was there such an adverse reaction to it, do you think?
Number of reasons, Nompu. First of all, I think we have to acknowledge that Lesotho Kanyako and his predecessors have done a really fantastic job in trying, under very, very difficult circumstances, to preserve the value of the rand. In other words, to create price stability. And it hasn't always been easy to say, but they've done a remarkably good job. Now, when you get somebody like the public protector, and we've heard so many people now, Gwede Mantashe, we've had Pierre de Vos, and many other noted people saying, well, you know what, she's actually exceeded her authority. This is not within her mandate. You start worrying, well, where's this coming from? Where on earth is this coming from? The Reserve Bank's independence must be maintained at all costs. And so then you start thinking, well, is this coming from somewhere else? You know who, from perhaps directions from number one. And in that instance, we've now got Treasury having been captured, which was a situation which we never thought we would envisage. And I think people must be ever more vigilant to make sure the same thing doesn't happen to the Reserve Bank. And hence, I think, the concern that's taking place and why the Rand is taking a bit of a beating.
I think I should just challenge you a little bit there and say that while you say that Treasury has been captured, of course, there are fierce denials that is the case. And then now let's continue talking about the Public Protector's pronouncement on ABSA having to pay 1.1 billion Rand for money that was lent to Bancorp in the mid-80s or whatever it may be. Did you see any reaction on the Barclays Africa stock? And what's your general view of it, given the fact that you did work there at one stage?
Yeah, look, I think this is a clear-cut thing. The money was repaid long ago. I really do not believe that ABSA has a case to answer. This is way in the midst of time. It's in the old apartheid era, and it's been fully brought out to the surface. So frankly, I'm not entirely sure where the Public Protector is coming from here in this one. And again, all sorts of conspiracy theories in terms of deflection and all sorts of things come to the fore here. Regarding the actual the Barclays Africa share price, to be honest, I didn't actually notice it. I suspect there'd been a bit of weakness, but no, really, I'm very glad to see that ABSA is vigorously defending this one.
Indeed, it is. All right, we're going to leave it there. We've run out of time, as always. Chris, it's always a pleasure to speak with you. That was Chris Gilmour. He's now an independent analyst, and after a short break, Nzinga will have more business news for you.